Hi, everyone. So today I'm with Andrew Powers. He is from LMP Capital, who I interviewed Rob, his partner, a couple of months ago. And Andrew's going to speak to us about New York real estate, his experience, and overall his background. So, Andrew, whenever you're ready.
Thanks for having me, Matt. I'm excited to be here. Yeah, so just kind of happy to jump in, tell you about myself. My background is originally from the investment management side. I actually came from a long short equity background. Work really in investor relations, capital formation, working with investors. Over time, I'm interested in kind of owning real assets, and actually being a principal on that side of the business. I met Rob Lombardo in business school. We had been investing in properties with another partner from my days at Fairfield University. And we were really successful in the Westchester County market. So we decided we were going to launch LMP Capital Partners in the spring of 2024. So, it really grew out of our complementary skill sets, acquisitions, operations, capital raising on the real estate execution side. Our focus has always been value add multifamily. I think there's a really great opportunity to buy assets at an attractive basis, create value really through active ownership. To date, we've successfully closed 4 rounds, pursuing a variety of different properties, particularly in Stamford, Westchester area. I've really always liked multifamily. There's so many different levers you can pull: improve the property, improve management, reduce costs, address different tenant experiences. So a lot of these opportunities really aren't immediate and obvious. The size that we operate in, the larger institutional funds don't really want to get involved in. So there's really an opportunity that we've found to, carve a niche for ourselves.
All right. Yeah, that's great. So can you let us in a little bit maybe on your background? Because I know I spoke to Rob. He did his MBA, and that's how you two met back in Fordham. And
Correct.
maybe speak about that. Did you study real estate investing there, or a passion you guys had together, an idea? Where did it start? That whole initial concept.
Yeah, I mean, again, I started my career at PIA Craft Large Mutual Fund, kind of working with financial advisors, then moved into role in debt capital markets. I mean, bondholders refinance their debt. Then I went back to business school. What really wasn't sure what I wanted to do in my career. There, I actually kind of got into the world of private investing, not in real estate, but in long short equity. I worked for a long short healthcare hedge fund, raising money where we took assets, over 80% higher, working with the director of marketing. Particularly, our focus was on family offices, fund of funds, and small institutional pensions and endowments. But while in business school, I met Rob. I always had an interest in real estate, and it kind of translated over from that private investment world. So Rob had more of a real estate background than I did, but we did both take intro to real estate together. It was
Mhm.
really interesting. We had a great professor, this guy named Lev, who really kind of brought the world of real estate straight to us. He brought in real people that we had to pitch deals to, which was excellent. We had to work as a group, value the property, sell it to the deal to investors. So that really gave me a great basis in how to structure a deal, how to work a deal. And then after the class was finished, we were like, oh, we really like this. This is fun and enjoyable. Like, why don't we try and do this in the real world? So, we had another partner from the class actually at that time. And the three of us went out. We thought, let's buy something. So we were looking at Hoboken. We really didn't know what we were doing. We were kind of focusing on like a single apartment. We thought we would just like minimize our risk and buy one single apartment. The deal, we kind of got halfway through, the deal didn't work out. It was like really depressing. Uh, but we continued on, and we moved into we realized also we kind of took a step back, and we're like, yeah, we can't make any money on a single apartment. It's just appreciation. Hopefully the market, you don't really own the whole asset, so it's harder to add value to it. So we then kind of explored, we left, the Hoboken idea and saw our opportunity in Westchester, particularly Portchester. Now, I
Mhm.
don't know if you really know the Westchester market, but Portchester is this small city actually right in between Greenwich on one side and Rye on the other, which are two really wealthy towns up there. This was more of a working class neighborhood, and we just saw an opportunity to buy a three-family home at a really attractive value. That was like over 10 years ago. So that's kind of how we got our start. We held the asset, we bought it, we renovated it actually mostly by hand because we were, cash strapped on our first deal. So it was a really good learning experience. Everything from putting in your toilet to, putting up sheetrock, painting. But we did great. We raised the rent like 300% across the building. We're able to refinance, take out cash, and buy another one. We moved over to a larger deal in White Plains, New York. So it's kind of been this rinse and repeat cycle that we've had that's really worked well for us, and it's what we brought to LMP Capital Partners.
And this is where it is, where he's talking about. So you could see Manhattan, Bronx, and then right here. Eastchester is right there. You said Westchester County, right? And Rye and all those areas. So there's Rye.
Greenwich is on the Connecticut side, but it's a stone's throw away.
Right. Yeah. And Portchester, right? You said as well?
Yeah.
Yeah.
Hmm.
So right there. And just so everyone could have a visual of it. Now, with that being said, uh, you told me, and I spoke about this with Rob, that you guys initially didn't really have experience with refurbishing the air in your properties, so you essentially taught yourself like carpentry skills and a lot of, uh, I would say, useful skills to actually make a good return on it and everything. Could you talk about that, like how you learned? What was the experience from that?
Yeah, I mean, you know, we go back, like we really like multifamily because it's fundamentally
Right.
something everybody needs. But there are properties that just need a little TLC. So, it works well working. We've kind of developed a real great construction team now. Um, Guys that we've been with had experience, some specialize in, plumbing or electric. But it was really just getting, hands on, jumping in. I like remember it was like hot summer day, and we were like basically putting in a floor. I think it was over July 4th weekend, trying to get this unit, because it was vacant. We got through that, but now
Right.
we're trying to get it fixed as fast as possible. I just remember it was so hot trying to cut these floorboards. We had guys, carpenters who had worked with us, kind of gave us a heads up, did a little bit with us, but showed us how to do it. So that's really helpful as you move forward because you're able to kind of know if the guys you're hiring really kind of know what they're doing, if you have a background, if you're
Yep.
getting ripped off, and it helps our current LPs because they know we can manage costs on these construction projects. So it
Exactly. Yeah.
really comes down to, learning the skills and not being an expert, but being able to kind of identify different, you know, operators in that field who maybe have a little more expertise and really know what they're doing, but at the same time knowing how much it should kind of cost.
Yeah, because the reason why I brought that up is every time I speak about real estate investing to either friends or family, everyone is always says, "Oh, it's expensive because of the maintenance of the property, right?" And I just wanted to show people that you can learn on your own. It is a possible thing to do if you put enough time and effort, and you could actually learn like you were saying, like cutting floorboards and stuff like that.
I highly recommend to all your listeners that you do work with, it's particularly like licensed people when
Yeah,
you're dealing with plumbing and electric, because that can get a little, more complex. But it is helpful to know how to change a socket or turn off the power or making,
yeah,
just as simple things like having a detector to see if a wire is hot, has real electricity running through it. It's important. But I feel like probably now we more specialize in maybe cosmetics, putting up sheetrock, sanding down, seams. We don't do as much of that anymore as we've
right.
grown, but we still know it helps us while we manage a project.
Right, yeah, like it'll, like you said before, it helps with cost cutting. Like not to get ripped off on certain things that need to be repaired and all that stuff with repairmen, electricians, or whatnot, or contractors.
And I think that's really kind of separated us is because we're owners and operators. A lot of funds, hire out, everything from rent collection to maintenance on the properties, but we do that all in
Right.
house, mainly from our experience of being, just having to early on, we were we were forced to learn this skill, but it's come in handy now later on.
So I also have another property that you we were talking about before recording, and this was on 41 Southfield Avenue right now in Stanford.
Yeah.
And I do have photos so people could see it. Can you explain a little bit about this property and what you're currently trying to do with it?
Yeah, no, 41 Southfield, that's our flagship property in the fund. It is a very
Is it
undervalued
here?
asset. We acquired around 1.6 million.
Okay.
It's a six-family home. Each unit is three bed, one bath.
Yep.
The rents were so low that we could
Photos.
not get traditional bank financing on it. We had to go to a private lender, just in order to get it. But the opportunity was there. Now, Stanford, again, I'm not sure if your listeners know, it's a little further north than Westchester. By train, it's about 50 minutes straight into Grand Central,
Here's
Manhattan.
Stanford. Yeah.
Yeah, it is a city, a lot of hedge funds up there. There is a good amount of business. This property was very undervalued. We were able to get it below the original asking price from the owner,
Right.
which was really great. And it, the rents being so low, we saw an opportunity to really improve them. Market rates for going right now, we've got one listed. It's about 3,700. So that's a pretty tremendous increase in rent. Now, granted, the units were in pretty rough shape. We have been working to renovate them and improve them pretty drastically. But again, that's what we like multifamily.
Yeah.
Significant low market rents and attractive management can produce tremendous return for our limited partners. Thinking about how everything works together, just when you're that property, it had a lot of potential. It just needed to be unleashed. And an interesting thing happened as we're working on this property. We were approached by a neighbor of an adjoining property, 15 Taft, who had a very large piece of land that was connected to the back of our property. This was really exciting. I mean, there was only a two-family house on it, but we saw that as an opportunity to refurbish that land into a parking lot, which we
Hmm.
just completed last week. And we were able to get 16 parking spots out of it, which is tremendous. There's no on-street overnight parking in this area, so
Right.
it makes a big deal. People, need their cars, they need to get to work. So not having the parking lot, you as an investor in that property are a real disadvantage. So, now this allows us to kind of increase our rents on the current property as we can guarantee spots. So it's huge. Sometimes these opportunities, just present themselves. We love finding off market deals, before they're listed. And it creates an opportunity that, a lot of big institutional shops might not go after. But
Right.
it's there, and we're really happy with the results so far.
So, but why Connecticut? Why not stick more into New York, like Portchester, and what you're targeting before? Was the deal just too good to pass on this, or did you just want to go into a different state? What was your thought process behind that?
I mean, I think it's a few reasons. The interest in the property is really like finding that gap between like how it's operating right now, current
Right.
rent, current expenses versus what we think it can. I mean, that really drives all our thinking and our investment thesis and our investment committee whenever we're looking, no matter where. But I mean, I'm not sure how much your listeners know, but the New York City market is really a difficult area to work in based on, the current rent regulations. And many landlords really don't find it's financially in their interest to improve properties because they're strapped due to the amount of rent they can charge due to, rent regulations, which have been in, effect since the 1950s, 40s, and are really outdated at this point. Connecticut is a little easier to work in. Landlords have more flexibility with the courts, and
Right.
the ability to be charged. They're not capped at how high they can charge in buildings, which makes for us great. We
Yeah, yeah.
want to work in an environment that's business friendly, where we can achieve our goals and not tied down by state and local regulations.
Yeah, and just this is from Newsweek, and I don't think Andrew could see it, but just to explain it a little bit, I sent him the article before. Is that Westchester County specifically, the prices have gone up from anywhere 9 to 16% year over year, and that is because they're, well, not to get political, but they're calling it the Mamdani effect. A lot of people from Manhattan or New York City in general are going to the suburbs like Westchester, like Connecticut. That's also how far is Stanford away from New York? Like an hour for a train?
It's about 50 minutes by train.
Okay, so yeah,
You do
so
get commuters from New York who live there. Um, they want more. I think I think, just to tie into your point, there's a pretty big exodus of people outside New York. I mean, that
right,
article you shared, I think the median rent is like 5,400.
yeah,
And what you
and
get for
referring to this
5,400
one,
is nothing. It's like the fundamental problem is like a severe housing shortage in Manhattan. And like people paying market rents are paying the highest rents on record, whereas on the affordable housing side, there's just not enough units, and the rent control regulations kind of make landlords like they're not going to fix up the properties because they can't charge any more rent.
yep,
The properties fall in disrepair. I mean, I see it all the time. We're constantly looking at deals, and sometimes you're like, wow, there's like a 30 or 20 unit building selling for like, I don't know, some very low price, $4 million or something. And you realize that the landlord just it can't make any money on it. So the value is just
yeah,
not there. You know what I mean? Whereas in a free market kind of rental, the building would be worth way more.
right, yeah.
And it
I mean,
hurts. Ultimately, it hurts, you know, the tenants because, yeah, the landlords just aren't going to fix problems because they can't make their money back.
yep,
It really doesn't. It's a difficult situation. This rent freeze, I think, for 1 million apartments is going into effect.
yep,
And renovating, replacement costs, those don't get stopped for the landlord. So the rental income's restricted. Insurance has gone up tremendously over the
yep,
past few years. I know even due to things that happen in California and Hawaii, wildfires have pushed insurance premiums up across the country. Um, and other expenses continue to rise, and landlords still feel that. So, as investors, we don't want to put our limited partners in any kind of situation where they would be, well, we can't make them money. That's not what we're looking for.
yeah. And the reason why I brought it up is because again, a lot of people that want to get into real estate investing, they'll see articles like that, like this, what Andrew was just referring to, and I sent them before from the New York Post saying that that New York City hits highest, I think highest ever rent. It's 15,500, 54, 5,500, an all-time high. And they're thinking, oh, I can make a lot of money because 5,500 a month in rent. Wow, that's a big number, obviously. So people are thinking, oh, I should invest in that market. But you speaking about the different regulations and the rules and the caps that you're allowed to, and then the maintenance of the property is insane. Have you invested in New York City before? Or no, do you just generally stay away from it because of these problems and you like to
Yeah,
do
we've
the
never invested in
suburbs?
New York City before. It's too difficult.
Okay,
There's a lot of big players already there. It just doesn't make sense.
of
We
course,
we
yeah,
found our niche. And I get what you're saying. It's a good question. A lot of people say, "Oh, real estate, like mailbox money, it's great." And
yep,
what I've learned, and I can kind of give to your listeners, is like real estate is simple, but it's not easy. The
yep,
concepts are pretty straightforward. Buy a property, improve it, manage it, don't over leverage. But you have to do those things consistently, and that can be, difficult for some. Um, and I think it's just not getting in over your head, really kind of looking at, you know, particularly, state and local regulations before you buy.
mhm,
How quickly, can you fill a unit? Like how much can you make? But also it's always good to do it with, I think a group. It's always easier when what I've learned too is just, partnerships are really important. Not everyone is great at everything. Some people are going to bring different skill sets. My background's more investor relations, capital
yep,
raising, construction management. While Rob is an amazing, valuation person, and our other partner, Mike, that you'll have to meet, is he's really great at, tenant management, tenant experience,
right.
working with them, being that, a voice between the two of us, which is great. So I think each person brings different strengths, that are incredibly important. Um, So yeah, that's really I think something I would pass on to anyone.
Do people come to you and they ask you, why don't you invest in commercial real estate? Why only residential? And do you have an interest in investing commercial anytime in the future? Is it too difficult? Because I've heard both sides. It's insanely difficult because of the office apocalypse, I think they're calling it in the news still. And residential is a thing to stick to. What's your opinion on that?
I mean, like commercial property still, it depends on each, local regulation. But I mean, I
Mhm.
think in New York City, it's like, or it's above a certain 5 units, really comes down to the financing you can get on a property too. Commercial is valued differently. They take into account the income versus pure residential single family homes are valued more on comps in the market rather than the income approach. But we have never invested in office. We've never invested in any kind of specialty, type of real estate. Um, I would not. Again, it's not really my subset. If the I would never put limited partners money into a project that I don't have experience in. I mean, we're really just kind of sticking with what we know and we know we're good at, and we know we can really produce superior returns. Um, that's why we just love. We find multifamily really attractive. Smaller middle market properties. They can be, there can be more. You can find better deals. You're often dealing with individual owners or families. Maybe they've owned the property for decades. You're not dealing with large corporations or institutions. Um, and these opportunities, a lot of these institutions pass over.
Sure.
But you can also get very hands-on. You're dealing with real people a lot of times in the transaction, which is helpful. So I think that's, so in our size, we're smaller. We can be nimble. We have that advantage. We can spend, as I said, time on opportunities that might be looked over by these large institutional players.
Okay. All right. Yeah. Perfect. All right, Andrew. Well, I appreciate it. Thank you for coming on and explaining more of the real estate process. Are there any final thoughts that you have or anything else you want to say before we go?
No, I think, a lot of it is just, in my experience, is taking the first step, doing your research, really understanding the risks of what you're getting involved in. I think a lot of people are armchair experts, but I've always
Yep.
found just taking that first step, calculated first step, uh, usually leads to good things. So I think that.
All right. All right. Great. Thank you. Thank you, Andrew. I appreciate
Thank you
it. Thank you
so
for your
much,
time.
Matt.
And
It
thank
was
you,
a
everyone.
pleasure. Hope to speak again. Thank you. Bye bye.